Hi guys, Sam here, and today I'm going to talk to you about bounce back loans and the implications of those on the property investor market. So if you're interested in understanding a little bit more about how bounce back loans can be used or not used to buy and sell a property over the next couple of years, then stick around because that's exactly what we're going to be talking about on this video. So thanks guys, really appreciate you joining me for this video. As I said, today we're going to be talking about bounce back loans. It's something that's been a real hot topic, and I've purposefully not actually started talking about these as when they first came about. I wanted to let the dust settle and see a little bit about what kind of implications they were going to have for the market. So a question that I'm asked probably more than any other at the moment is, can I use a bounce back loan to buy a property? Now, the answer to that is possibly. So the government guidelines are saying that a bounce back loan should not be used to purchase an asset effectively. And a property is an asset, especially if it's a rental property, a property that you're planning on renting out. Pretty much the entire mortgage market, I haven't come across one lender yet that has said that they would take a bounce back loan as a deposit for buying a property with. So that pretty much rules out buying with a mortgage. But as we know, that's not the only way that you can buy a property using finance. You could look at bridging finance, you could look at development finance. So what about these lenders? Now, again, pretty much across the board, we're getting told that we can't really use these types of loans as deposits, and that's that's pretty much been from most bridging lenders that I've spoken to. Now, outside of that, if we're talking about projects where maybe you're going to be doing some renovation work or development work to a property, now where does that fit into this scenario? So lenders that offer bridges most often will want to see not just your deposit in terms of a proof of those funds being available, but also the fact that you actually have enough money to do the works. Because from their point of view, if you have enough money to purchase the property but don't do the works, then actually what's the point of you buying that property with a bridge in the first place? Might as well just bought with a mortgage if the property is mortgageable. So they'll want to see that you can actually show that you've got that money. Now, because the technically work doing to a property is not fitting within the government guidelines of using to buy an asset, you're using it within your property business in a slightly different way. You're using it to renovate a property. And so actually the feedback that I'm getting from some bridging lenders is they're quite happy with bounce back loans being used as the funds to renovate properties. Some are still saying that they won't accept that. Let's be honest, but some are. So that is actually a way that you potentially could use a bounce back loan to increase to further your property business. Now, there is a few other things to consider here. Not only is the cost of works something that you could cover, there are other things. There are fees involved. There are solicitors' fees, there are broker fees, there are lender fees, there are valuation fees. There's all these other fees that come into play that potentially you can use those funds for, that would constitute not purchasing an asset. So would come outside of the government guidelines, and there are therefore going to be some lenders that are going to be happy with it, and we've seen that starting to happen. Now, one other way that another question that I've had posed to me on this is, can I use one of these loans to buy a property cash, flip it, and then refinance that way? Because in a roundabout way, what I've done there is I've used that money, and then I'm basically paying myself back with the refinance. Now, the answer to that is, well, yeah, in theory, that sounds like something that is quite possible. But I've actually had some conversations now with some mortgage lenders, and take note of this, because this is quite amazing. Some mortgage lenders are actually saying that if you buy with a buy a property cash using a bounce back loan, they're not even going to do the refinance. They're not actually going to refinance you and repay that money because they believe you have contravened the government guidelines to buy a property asset using a bounce back loan. So they are not going to give you your refinance. You're like, okay, well that doesn't help. But you think, well, hang on, how do they know this? When you buy a property cash, mortgage lenders are much, much more wary of these transactions because they believe there hasn't been another lender, a bridging lender, for example, that has done the due diligence and the anti-money laundering checks when you're purchasing to ensure that this is clean money. So what they will do as a matter of course is they will do those checks again during the refinance process to make sure that they feel comfortable that they're not laundering cash, basically, or helping you and assisting you in laundering the funds. So of course, that process isn't any different if you're buying with a bounce back loan. They are going to find out you bought with a bounce back loan. They're going to want to see bank statements. They're going to want to understand it. They might even need a statement, a written statement from your solicitor to confirm how the purchase was made, and they may well decline you on that basis. So be very, very wary of this if you think that that's your get out of jail free card, because in reality it probably isn't. The only way really of getting around that is if you're going to do a completely non-financed property flip. You're going to use the funds, buy a property, flip it, pay back the bounce back loan, and then your profits you've got sitting in your bank account to go off and buy rental properties with, something like that. So that sort of covers off using bounce back loans to finance or help finance property projects. The second part to this is the implications of taking out those bounce back loans on your mortgageability. Now, definitely getting mixed reviews from lenders on this. Some are saying that they see those that have taken out a bounce back loan as an additional risk. They feel as though their business, their income, their livelihood was at risk, and therefore they required a loan from the government to help them sustain their normal way of working. And this can sometimes raise red flags when it comes to lending. You're seen as an additional risk. That's all well and good in normal circumstances, but obviously things are a little bit different. So I do think lenders are being a bit more lean on this than maybe they might be in normal circumstances. But the questions are there. Have you taken out a bounce back loan? What was the bounce back loan used for? Why did you feel the need to take out a bounce back loan? These kind of questions, they are starting to pop up when we're getting to underwriting stage, not necessarily on applications, because that takes a lot of, it's tricky for lenders to change their application forms because a lot of them are online. They're coming up during the underwriting process. So be wary of these. The best thing to do is to be transparent and to give them the information and preempt these questions being asked. So what we can do is, prior to an application, we need to make a lender aware of this. They can tell us at source whether it's going to cause a problem. If it is, we might not choose them as a lender. If it isn't, they are still going to ask the questions. We just need to be prepared. So let's get all the information together. Let's get our explanation together, and we can send it in with our application so that the lenders are fully aware of this. So at the moment, I don't see it as something that's causing widespread issues, but it is something that we definitely need to be wary of, and we need to, counter that and tie that off, basically. So that is a nice short little video about bounce back loans and the implications on property and the funding side of things, basically. So just to summarize, 2 sections. Section number 1, bounce back loans, can they be used to purchase properties with? Basically, no is the answer to that. Mortgage lenders won't allow them to be deposits. Bridging lenders more than likely won't allow them to be deposits. But if you're buying a property that you're going to renovate, they can potentially be used to cover the cost of the works, the fees involved, your solicitor's fees, all that kind of stuff. So that is a way that you can utilize it. If you're buying to cash to then refinance, also be wary that there are lenders out there that aren't refinancing cash purchases where bounce back loans are used wholly or in part. So you might just need to flip those on. Second part, was the implications of actually taking out a bounce back loan on your mortgageability. It's pretty much a mixed bag. The best thing that we can do is to preempt that they will want to know information about it, and to gather together information and explanation as to what you've taken out, why you've taken it out, and what those funds are being used for, so we can cover that off with underwriting. Hope that was helpful, guys. If you haven't already, please subscribe to my YouTube channel by clicking on the subscribe button and the bell so that you can be notified of future videos. Make sure to go and follow me on Instagram at the Sam Norris. I'd be very, very grateful if you did that. And if you've got any comments, please leave them below, and I will come back to you with any questions that you've got as soon as I possibly can. Stay safe. I'll see you on the next video, guys. Bye.